Very good afternoon to one all present here. I request our speaker for the day, CA Dr. Mr. Kandasami, and welcome to the dais, please. I request all the delegates to please stand for the ICAI note sound. Very good afternoon to one and all present here. I am very privileged and honored to have the opportunity to welcome you all to this topic and study circle session on taxation and assessment of NPOs, trusts and various aspects pertaining to the taxation and assessment of the same. We have with us easily the best speaker in South India on this topic, CA Dr. Kandasami sir, and he's been a pioneer in this specialized field for more than 30 to 40 years now. I've had the privilege of listening to him when I was a student, and I continue to listen to him today, and it's always a pleasure listening to him, so thank you so much sir for joining us today. And before we proceed with the introduction of the topic and the formal introduction of our speaker today, we have been doing multiple seminars as part of the Direct Taxes Committee, and as the chairman, I want to do more programs which retain to practical aspects pertaining to the members. So this is another topic which is similar to that, because today there has been a huge development in terms of how trusts are taxed and how it has changed. Earlier it was used as a huge device for tax planning by various people across the country. Even today, most of the big companies, the shares are held largely by trusts. You take Tata or you take any of the big companies, always it is held by the trust. So it has always been seen as a way to help plan taxes. So learning the assessment and how the department has also dynamically changed how they are assessing trusts. The issue of 12A registrations also today is a little bit changed from how it was in the past. So all these developments is very important to be aware of it from a practical point of view, and sir is the right person to take us through that. We are also planning to have multiple sessions going forward on the direct tax code. As we all know, today the direct tax code was submitted to the Honorable Finance Minister, and it has only 300 sections. That is what they have said. There is no draft report as such which has been released. So along with the report itself, directly the direct tax code, the new direct tax code has been submitted. My views, I do not think it will be substantially different, but at the same time we have to be prepared, we have to be more geared for it. So we will be having more sessions. Dr. C.A. Girish Ahuja is one of the persons part of this task force who have been constituted to prepare and plan this direct tax code, and we'll be inviting him also for a program on this, so that we'll be prepared for this new code. It is going to be a very, very dynamic code. It is going to be in line with all the Bedami Act and other acts which have been brought about by the government. So the repercussions will be far and wide. So we'll be having those sessions also. And I understand that taxation of trust is also going to be taking up a very important part in the direct tax code. So now I will proceed. I will proceed to introduce formally our speaker for the day, CA Dr. Kandasami sir. Dr. CA M. Kandasami, FCA PhD, is a practicing chartered accountant, is a managing partner of a firm based in Chennai. He is a pioneer in providing professional support to the NPO sector and specializes in governance, financial management, legal compliance, including income tax, FCRA, GST, and related laws applicable to NPOs for more than 4 decades. His experience spans a broad spectrum of NPOs ranging from grassroots groups, educational, medical, vocational training institutions, social and religious bodies, various welfare agencies, and CSR foundations as well. And he has also been working with the United Development Program for these aspects. He coordinates an all-India network of auditors focusing on NPO support and has facilitated setting up of such networks in Asia and Africa also. He is the most sought after trainer. I don't have to say that even though it is in his profile. Everyone here already knows that. The most sought after trainer and speaker when it comes to any lectures pertaining to taxation of trusts or NPOs, and he is an eminent management and social work institutes as well. He is authored 7 books on the core aspects of NPO governance, financial management, capacity building and legal compliance, and the latest being GST impact for NPOs. In January 2019 only is released it. Each of his publications have been unique and it has been very well received, including his experience is well appreciated and it comes through in the books that he shares, including practical aspects. He serves in several statutory and other committees of government and NPOs and has contributed to the study of charities administration in India for the government. And he's been conferred prestigious awards for professional excellence, various bodies, and have been conferred this on him for his contribution in this field and to the profession in general. This is only a brief introduction of him. Sir has been a speaker for so many years now, and he's a very good friend of mine and my father's also. And thank you so much, sir, for taking time out of busy schedule. Please give him a very, very huge round of applause for being here. Sir, before I invite you to the podium as a token of our love and affection, I request C.A. Abraham, sir, to please present a memento to our speaker today. So without further ado, I hand over the podium to our speaker for the day, C.A. Kandasami, sir.
At the outset, I wish you all a very good evening. Thank you so much that I have this opportunity to be with you. Thank you so much, Abhishek, for your kind words. I have no words to describe. More than 35 years back, my beloved friend, Mr. Murali, his dad was one of the first to emphasize on this topic, both here in the SIRC as well as outside. For example, we used to meet in Hotel Farm Grove, the Association of Chartered Accountants and other forums. I am so pleased after nearly 3.5 decades, I am having this opportunity of being introduced by Abhishek, my beloved friend's son. I'm so proud of you, Abhishek, and thank you so much, and I wish you all the very best for all your efforts for the leadership in our institute, and particularly for this topic and for this area. I'm also very happy, in addition to sharing the topic today, also to meet several of my friends. I can just count right from Daily there to Singhi here to be there, and then Vishwa. I can just go on. It will take some more time, so I would not attempt that, but I am also very happy to meet you all. I know that some of you tell me that I have come because you are there, and I want to tell you the same thing, that I have come because you all will come, and you are interested passionately in this area, not only listening to this but also using it for the good of the NPOs who are making a difference in the lives of the people in this great nation. In this great nation today, we are actually so prominent in the world. At the same time, two aspects are very clear: the ocean of poverty, where millions are there, and the islands of prosperity, where few millions are there. And as you know well, by your own involvement, several types of involvement that you have as resource persons, as advisors, as auditors, as members in the board, as chairpersons, as treasurers, so many roles you play in these bodies, and you make a tremendous difference in these bodies by more than giving money, by sharing the professional expertise. And I am so touched by your great gesture, and that is a great motivation for me to come and share whatever I go through in this area. So today you can see 3 A's: application, accumulation, assessment of NPOs. How is it relevant on the 20th of August 2019? Accumulation, application, or application and accumulation are absolutely relevant, because this is the time we are actually computing and filing the return. So what is application and what is accumulation, and in the course of application what has to be accumulated? And in fact, accumulation is nothing but again application, deemed application. Deemed application. Very relevant at this point of time, as we are filing or helping or assisting or advising to file number of returns at this point of time. Thousands and thousands of returns at this point of time. The third one, assessment of NPOs, is also very relevant, because we are going through the time barring for the assessment year 17-18. We just finished 16-17 last December. By this December, assessment year 17-18 has to be completed. So it is also relevant. There is a 4th A. Luckily the SIRC did not put it up. I also don't want to put it up. That is attachment. Attachment. If this 3 goes wrong, anything goes wrong in this 3, the 4th A will come into play. But I would rather like to say, by our accumulation of our knowledge and application of our knowledge in the proper application of the funds of the trust, and also proper accumulation of the funds of the trust, we don't even think of the 4th A, that is attachment by the income tax department. Though that has been happening, several trusts have been, banks are frozen, FDs are frozen, that is also happening. But by our session like this, we should never allow a trust to go for an attachment. Having said that, I go quickly, given the short time for this topic, I go quickly to the provisions in the Income Tax Act relating to exemption of NPOs. Not all of them, the key provisions. Some of them or most of them is well known to most of you. I am just going for a refreshing. Key terms are 215 and 224. We'll see 215 in another slide. 224, 224 is the definition of income. And the definition of income, 224, is going on expanding. The latest addition to 224 2A is the government grant. There used to be questions, is government grant an income under 224 2A? Will that be taken into account for the trust gross income? Crores and crores of grants in the case of institutions such as schools and colleges. We have thousands of schools grant in aid. We have hundreds of colleges which are in grant in aid. They are not government schools, they are not government colleges, they are private colleges, private schools, but aided by the government. There was a question whether the aid from the government to these institutions, whether it is educational or research or medical, whether they are all income. That is settled now by the amendment to 224 2A, that government grant, government subsidy, anything in the nature of grant from the government, any government, state, central, etc., is also income. And 215 will go in a minute to another slide. And organizational exemptions. There are two types of exemptions, as you are well aware. The total exemption and the ordinary, or what you may call it, annual or 11 exemption, etc. But the total exemption, the term that was used in the 80s and 90s, totally it is lost its meaning. Today, you will see in a few minutes from now, all the provisions that are applicable to section 11 exemption are also applicable to section 1023 and total exemption. Indeed, there are some benefits which are under 11 which are not available under total exemption. For example, 11(1)(d), the corpus donation. Whatever be the amount of corpus donation, though it's an income under 224(2)(a), it will be exempt under 11(1)(d), because 11(1)(d) gives a complete exemption for a corpus donation. So, I am not going to the differences at this point of time, but I would like to say that it is good for us to know the whole scope of both total exemption as well as the section 11 exemption. Of course, donor exemptions which are very clear, 80G, 35 AC is no more. 35 AEC is no more relevant. Still people talk about it, but it has no relevance. Whereas 35 has lot of relevance. 35 has 35(1)(2) and 35(1)(3). 35(1)(2) for social, scientific, and 35(1)(3) for social. And of course, TDS and e-filing, both are applicable like any other bodies. Now we go to 1 minute on the charitable purpose. This is the fundamental part for proceeding further. 215. 215 has these many boxes. This is like set of boxes. We have to be clear which one we have to tune in. When I look at in the last 3 to 4 months of number of returns, the ITR 7 filing, we have to tune into several boxes, not just one box. There are some organizations which are purely educational. They run schools, they run colleges, they run business schools, purely educational. One of the limbs of the 215 definition of charity. Now there are certain other institutions which have both education and medical. For example, the whole of the day today I was with a group of institutions who have all the three. That's education, number of educational institutions, number of medical institutions, and number of social activities coming under the relief of the poor. Home for the aged, home for the terminally ill, home for children, home for orphans, etc. So, this is the fundamental part, section 215, definition of charitable purpose, for proceeding further on this topic. Now, yoga, of course, is a new addition from 2015, and medical relief is an old limb. Preservation of environment and addition, a recent addition. Preservation of monuments and artistic and historic interest is also a latest addition. Advancement of any other object of GPU, general public utility, is a mischievous one. Very mischievous, and we have to be very cautious in that, because as you see there, if it has activities of trade, commerce or business, then the aggregate of receipts is less than 10% of the 20% of the gross receipts, and the business should be in the course of carrying out the activity, then it is charitable purpose. And if one of the two is not there, like it's more than 20% or it is not in the course of carrying out the activity, again it will not be a charitable purpose. Just since we are professionals of high caliber, I would like to say here, this is not only in India. There are times I have been asked to give a study to the income tax department, for example, comparative study of this section in other countries like Europe or in United States or in the Philippines, and if you see, most countries have this section. The number of the section will be different. We call here 215. For example, the US will call it 501c3, but the list is same. In fact, some countries have a longer list. US has, as of now, I think under this category of charitable purpose, there are 28 items. 28 items, like housing for the poor, cemetery, etc., etc. But in the whole world, in most countries, you will find for the non-profit sector, the tax law of that country, like the IRS in the US or other tax laws in other countries, they have this concept. What is charity? Now, having said that, we go to this is just an overview for the 3A. The focus today is 3A, that is application, accumulation and assessment. This is just a quick bird's eye view to move to the application, accumulation and assessment. Organizational exemptions and two types, total exemption and annual or conditional exemption. As I already mentioned to you, total exemption has lost its meaning totally. No more it is a total exemption, it is also conditional exemption. Now, you will see these 5 items very common. I will put another slide to classify them into education, medical, religion and charity. At the moment, look at the section wise. 1021 speaks of research institutions. We have got thousands of research bodies, purely research bodies, scientific research. For example, vision research, hearing research, disability research, so many types of research bodies. Though they are all coming under section 1021. And then the educational institutions, there are 3 types. Substantially financed by the government, gross receipts below 1 crore and gross receipts above 1 crore. Similarly, medical institutions, 3 types. Substantially financed by the government, below 1 crore gross receipt and below 1 crore, above 1 crore gross receipt. And after that, 1023C4, which is public charitable, and 1023C5, public religious uncharitable. I missed the word charitable there. And very often people also mistake saying that 4 and 5, 4 is purely charitable, 5 is purely religious. No, it's not like that. 4 is purely charitable, 5 is religious come charitable. It can be religious come charitable. But definitely 1023C5 is not purely charitable. It is primarily religious and then come charitable. Now, going back 20 years, we are in 2019 today. If you go back to 20 years, as Abhishek was saying, 35 years back when I started in this area, these were 2 blanket exemptions, 1022 and 1022A. The whole of accounting, auditing, filing, returns, assessment process, everything is one line. That one line was the assessee is exempt under section 1022. Full stop, no comma, no semicolon. I still have those audits of the pre-1999 era. So pre-1999 era, you had educational and medical. Now those 2 only transformed into 1023C, 3A, AB, AC, AD, etc. Those 2, So to look at the current scenario, this is the current scenario in a very simple way. That is 1023C, 3AB and AC substantially financed by the government, and there was a lot of debate about what is substantially financed as usual, but Rule 2BBB has come in from 1/4/2015 to say that common sense definition, it has to exceed 50%. Previously that was not there. So there were even large institutions, the substantially financed definition when it was absent, below 50% also were considered substantially financed. When there is no percentage, then what's the problem? Substantial can be 25%, 30%, 40%, but now it is clear under Rule 2BBB, it is exceeding 50%. And then 1023C, 3AD, 3AE, gross receipts below 1 crore, and 1023, 6 and 6A, not 4 and 5, 6 and 6A, gross receipts above 1 crore. Can you tell me what's the difference between above 1 crore and below 1 crore? Above 1 crore needs approval from the government, approval from the CIT. Previously it was Chief CIT, previously it was CBDT, now it is a CIT exemption. So 6 and 6A, that is when the gross turnover is exceeding 1 crore, you need the permission, approval from the CIT exemption. Whereas for below 1 crore, no such approval is required for availing the exemption. That's the simple but very important difference. And then 1023C4, as I said, is charitable institution of importance throughout India or throughout the state. And then 1023C5 is religious institution primarily, but as I told you, it is religious cum charitable, both. Having said that, now I go to the conditions for availing this exemption. Conditions for the total exemption. When I finish the conditions, you will ask me, is it really total exemption or is it totally conditional exemption? Because there are so many conditions. Number one, application has to be made in the prescribed form. Nothing like that in the pre-99 when 1022 and 22 capital A was in the statute. Nothing like that. Now we have to make an application and call for necessary documents and make enquiry, that is by the department, and accumulation of more than 15% is for 5 years deposit, just like the 11.2, which I will be speaking about 11.2, 5-year accumulation. Here also the same condition is there, and business is incidental, separate books have to be maintained. 11.4 capital A for section 11 exemption is also a condition here for 1023C, and then 1 year time limit to pass the order, that is after filing the approval, application for approval, department has 1 year. You may ask, what's the big deal in 1 year? Previously there was no time limit for passing the order. I still remember in 2000 when we applied for 1023C, we got the order in 2007, 2010, and you can imagine the assessment situation. Assessment was made because there was no order. And after receiving the order, after almost 6 years or 7 years, then we give the order and we ask for revision of the assessment. So many issues were faced at that point of time. But today it's very clear the department also has to pass the order for the total exemption within 1 year. And then, of course, this is a very special one. Balance amount of Gujarat Relief Fund to be transferred to PM National Relief Fund. You may ask, what is special about the Gujarat earthquake? We have got so many earthquakes. We have got Latur earthquake, we have got so many other earthquakes, we have disasters like tsunami, we have Gaja. We are not in deficit of disasters at all. Then why only Gujarat? The reason is, a lot of monies were collected by NPOs, not only in Gujarat, more out of Gujarat. And they were not spent. It was there part of the financial statement. Crores. That's why this particular special provision was brought in, that if you are not spent for the disaster, don't create another disaster by keeping the money. Please transfer to the Prime Minister's Relief Fund. So this is a sign that if we collect for a particular disaster and if we don't utilize it, not a good sign. This is what will happen. Even today, money collected for 2004 tsunami is unspent. Here and there, you have money collected, and you have money collected for Tana cyclone, is not spent even for Kaja cyclone. Some cases. I'm not trying to give a bad picture about NPOs here. I'm trying to say some monies like this are unnoticed. Why even for last year Kerala floods, monies collected are fully not utilized as of today. I don't know, that's why this year also the floods have come. Because often they will ask a question, sir, I collected this, we made an appeal for Kerala floods, sir. Can we, now that we have not spent it, sir, what shall we do, sir? I think now they have the answer. Kerala flood has come again. At least now you spent it. So this is because the focus on this fund-based accounting in the NPOs is also limited. We see the financial statement when all the events are over. We are about to file the return. Very few days before filing the return. Then only we get a picture. And that time it is too late for us to send the money here and there. And that too, if we have accumulated the money under section 11.2, then they can't transfer to another entity, as you know. They have to spend it themselves. During that year, collection, the year in which they collected, they can send it to any other entity. But after they accumulate under 11.2, you cannot transfer to another entity. Moving further on this, payments out of the accumulation is not allowed, that's what I was saying. And then 40A 1A and 40A 3A, that is a new provision, and that is, if expenditures are more than 10,000 in cash, or if TDS is not done, then there is disallowance. Cash expenditure fully disallowed, exceeding 10,000 in cash. Non-TDS expenditure, 30% is disallowed. 30% is disallowed. It's huge. Very often non-TDS expenditures are capital expenditures. Building, the development, construction, 1 crore, 2 crores, 5 crores, 10 crores, and imagine if TDS is not done. If TDS is done, hardly 1% or 2%, depending upon the contractor, individual or non-individual. But if that is not done, the damage to the trust is huge, very high, at least 10 times, minimum 10 times. And then this is what I was explaining, 40A, 1A and non-deduction, and 40A, 3A, 3 for cash payments. This is from 1/4/2018 onwards. In fact, this is the first year. And when you go to ITR 7, that's another topic. I have not put here ITR 7. I just had half a day session with the exemption officials the other day, last week, with Kerala and Tamil Nadu exemption officials. ITR 7 and the story about ITR 7. From 2008 onwards, 2019, the ITR 7 has transformed itself from an LKG rhyme to a PhD thesis. I cannot put it better. From a simple LKG rhyme to a PhD thesis. Today, if you fill nicely, if you fill ITR 7, you can submit a thesis. Tax exemption for charities, perhaps. You can give a title and submit a thesis. So, in that, you will have all this already. Fortunately, Form 10B, which is such a small form, is also the new proposed form, is a big form where we have to certify. I don't know what all we have to certify. I am not going into it this evening. So, there also all this have to be certified. 48.3, TDS and cash expenditure. And imagine there are charities with 100 crore transaction. I have example of 3,500 crore transaction. I have an example of 7,500 institutions, single entity, single company, non-profit company. Just imagine how are we going to certify these items, part of the Form 10B, and fill in the ITR 7.
Sir, sorry to interrupt.
Yeah.
One doubt. You mentioned that in the case of non-deduction of TDS, it is allowed. I understood that point. So is the case with cash payment more than 10,000.
Yeah.
You also talked about capital expenditure being disallowed to a large extent. I don't understand.
That is, non-deduction expenditure can be revenue or capital. See, take two examples, simple example. Let us say an AMC payment subject to TDS. It's a revenue expenditure. Construction of a large school building or a hospital building. Today we have got 100 crore building.
Right.
Some of the institutions, 100 crore, 200 crore is nothing today. And if there they don't do TDS, capital expenditure is also application for the income. Capital expenditure, are you with me? Not only revenue, in the case of non-profit, it's not only revenue expenditure, it is also, and in the capital expenditure, if 30% is disallowed for non-deduction of TDS, the risk is very high. That is what I mean. Is it okay? Right. Okay, then another proviso, 14, application on or before 30th. If we want approval for 1023.6, C6 or 1023.6A, that is for above 1 crore educational body or for medical body, we have to apply during the year on or before September 30th. Only then for this assessment year, this financial year, for the next assessment year, it is possible. So that the order can be before 1 year, within 1 year. Then it will be on time for completion of the assessment. And anonymous donations, you are familiar with that, 115 BBC, and prescribed authority CCIT from 1/4/2017, CIT with effect from November 2014. Lot of delegation has taken place now. Lots and lots of things done by CBDT were all pushed down to CCIT, and after that it is to the commissioner exemptions. And as you are aware, commissioner exemption, single commissioner for the entire state. Of course, if you go to Andhra Pradesh, it is Andhra Pradesh, Telangana and Odisha, together 3 states, 1 commissioner exemption. At least Tamil Nadu, we have whole of Tamil Nadu, 1 commissioner exemptions. Today that is the scenario. And we go quickly to the annual or the conditional exemption. 6 things, all of them you will be familiar, so I will be just rushing through just for refreshing. Registration 12A, 12AA. This subject alone we can discuss for a whole session. When it came in 1973, what was it and how it has transformed today. 1973, we only have to give a Form 10A application on which they put a chapa, 12A order. Later on, what they did, they acknowledged the Form 10A, saying we have received your Form 10A. That's the 12A. And later on, they started passing 3-line order, 1 para order. Today it is 2 pages to 3 pages. It is the latest orders. If you see, almost the provisions relating to non-profits are repeated in the 10A, 12A order. All the various exemptions and conditions. But one thing, today, it's become digital. 12A, you can go to the portal, you can fill all the requirements in the portal for 12A, and then you also will get the query in the portal, and you can make the reply also, response also in the portal for 12A, and order is also posted in the 12A, in the portal, not for 80G. 80G, you can file the application in the portal, but thereafter it is manual, but that's also very, very quickly going to be digital. I feel this is a great advantage. I remember last 20 years, we used to have something called interface with the income tax department. I don't know if some of you have participated, have you? Where we used to have the commissioner and entire team of officials of the exemptions, and we used to have some 300, 400, 500 NPOs, not only representatives, not only ourselves, but also the NPO leaders, chairpersons and treasurers and trustees, and we used to give a lot of feedback. For example, I remember one person when we conducted an interface in Tirunelveli, he said, "Sir, all the way from the Cape Comorin, Kanyakumari, I have to come to Chennai, sir, to file one application, sir." And I remember the commissioner said, "Don't worry, very soon you can file from your office." You know, so I remember that very well, and today that is a reality. We can file it from our office, we can also file the response from our office, and we can also get the order posted to our office, to the website, into the portal. And then, of course, I'm not going to cancellations. Originally there was no power for cancellation of 12A. That's why they brought 12AA. Now 12AA has a procedure for granting registration, also lots of power for cancellation of registration. 12AA3 cancellation, 12AA4 cancellation, and 12AA3 two scenarios for cancellation. One scenario is that the funds are not spent in accordance with its objectives. Another one is not genuine. These two are not easy to be established. But 12AA4 brought in serious implications because any violation of 13(1)(d), that is the 11(5) violation, investment violation, will result in cancellation of 12A. Similarly, 13(1)(c) violation, that is any benefit to the interested person, will also be violation, and that also will be consequence for 12A cancellation. Do you know what is the latest one? Finance Act 2019, Finance Act 2, 2019. Any other violation of any other law applicable to NPO will be violation of also 12A, cancel 12A.
That is PMLA also, Prevention of Money Laundering Act. Any violation on that?
Yes, thanks. Our friend is referring to the prevention of the money laundering. But the reality, of course, one of the suspected activities of some of the NPOs. But you know the problem? Many NPOs are at loss to know what are the laws applicable to them. At loss, LOSS. To know what are the laws applicable to them. If you really go into it, some of the NPOs, some 17, 20, 25, 21 laws are applicable to them. I'm not exaggerating. Take a school for the differently abled people. You know, this country today has 2.21% of 1.4 billion people, differently abled people. 22 varieties of differently abled people in this country today. Now, such a school should have so many approvals. One of the approvals is accessibility audit. Access audit, not financial audit, not tax audit. Access audit for differently abled. From there to the building, the stability, the fire, the town and country planning, to so many approvals. Now just imagine if any violation of any of those laws is going to have a serious impact on the 12A cancellation. And once 12A is cancelled, are you remembering accreted income tax? Accreted income tax? Accreted income tax says if 12A is cancelled, 30% of the market value of the entire properties of the institution or the assessee will be taxed at marginal maximum MMR. The logic is you ought not have received exemption from the beginning. You have been enjoying the exemption and that is how you have accumulated these properties. Tax it at 30%. You know. So this is the kind of situation that these bodies are facing. But you know, there is an old saying, ignorance is bliss. Many NPOs are very happy, blissful, because they are ignorant. Who is more worried? You and me. You and me, you know, because we have to file the return, and if there is so long they have no problem, no tax notice, no show cause notice, no tax demand, they will be happy with you. Thank you, sir. Thank you, sir. Moment they get show cause notice, we will be attacked. We will be the first target, isn't it? Okay. Moving further, compulsory audit, 12AB. There are also 1023C case also compulsory audit. 12AB for 11 also compulsory audit. Only the form is different. Here it is form 10B, there it is form 10BB. 10BB. And then application of income, originally it was 85%, 75%, now it is 85%. We are going to speak about it little in detail. Accumulation of income for 1 year, 11.1, 2 years, 5 years, 11.2, and then investment under as per section 11.5, read with 13.1D, and filing return of income, not only 4 capital A, but also 4 capital C. 4 capital A is for the regular trust and societies, 4 capital C is for 1023C cases. All those 1023 cases. 139, 4 capital C. 4 capital D is for important people, political parties. Totally exempt. No conditions, nothing. Whereas 4A and 4C are the people whom we are concerned. Okay? And 12A, I need not take your time. It came in 73. The form 10A, still the same form. Procedure is now in 12AA. Time limit order for 6 months, that is still there. In the time limit, there are disputes. Certain courts have taken a view that if within 6 months no order is passed, it is deemed granted. Whereas the jurisdictional High Court, Madras High Court, has not agreed with such a view. There has to be a spoken order. So it is good for us to follow it up. That after filing, whether in portal or otherwise, now it is in portal as I told you, it's better we follow it up and see whether it's happening within the 6 months period. Now they have passed, if you see latest reply from the income tax in the portal, they will give 3 dates in the same notice. Have you come across recently? 3 dates in the same notice. Date 1, date 2, date 3. No more 3 notices. 1 notice, 3 timelines. If not this day, next day. If not that day, we will close the file by the 3rd day, which is rather simple. We have a schedule. Otherwise, you don't know when the next notice will come and what will be the time frame. Very often, it will be that day will be the last day. Previous evening, we will get the notice, and next day you have to amend the deed. How will you amend the deed? If you have to go to the sub-registrar office and amend the 2 clauses, investment clause not there, dissolution clause not there, how are you going to do that? Trustee has to be available to amend the deeds. And with effect from 1/6/2007, no condonation. What's the history here? up to 31st May 2007, from 1973, commissioners had the discretion to condone the delay in registration. I have the experience of hundreds of trusts got condonation from the commissioners, right from 1973 up until 2007. For 2007, 31st May they closed this condonation. And then it went on up to 30th of September 2014, a very sad period. Very sad period I call it, because hundreds of NPOs who were granted 12A, they were not granted with the retrospective effect because the commissioner does not have the power to do that. Whereas from 1/10/2014, something better has come in the statute. And what's that? No need to go for condonation. If you apply belated and if you get a registration order, past years also you are eligible for exemption, provided no other violation. The only violation is lack of registration under section 12A. Interesting, you know. Now I see number of bodies who have not applied for registration in the past for one reason or another, apply, getting the registration and getting eligibility to have exemption for the past years also. You may ask me how to get exemption for the past years. Just to say no 147 notice, that's all. Huh?
Taxed as AOP, what happens then?
Up to AO. Good question. Each of this line, if we go on, we will have separate sessions. But feel free to ask. It's an interesting question. If it has been already taxed, and if it is before the assessing officer, and the commissioner grants 12A, the assessing officer has to close. He has to grant the exemption. But then the question is, some of these cases are not before the AO, it is before the CIT appeals. It is before the ITAT. So judicial process is going on, whereby the view coming is, AO or CIT appeals, it is pending before the department. And I got the order. Why not I be considered for exemption? These appeals are going on separately. And I am of the opinion this will be in the favor of the trust. Because whether it is AO or CIT appeal, same issue is contested. It's not a different issue before different people, isn't it? It's okay?
Yeah.
Right. Shall we move on to, I think this I have already explained. Cancellation also I have already explained. Reasons for cancellation I have explained. Lack of genuineness, not carrying out in accordance with the objectives. Very often, not carrying out in accordance with the objectives are between religion and charity. Some activities which we think is charitable, is department says it's religious. So, with the result, we have got some of the cancellations are commercial activity. For example, when the GPU amendment came, that you cannot do commercial activity if the activity is not in accordance with your objective, etc. Lot of the promotional business, commercial. FICTI and then some of the Chamber of Commerce, they were all cancelled after all year.
Not only Chamber of Commerce, even good music halls where the concerts was charged.
I know.
They thought that it's a commercial.
I agree.
Who will give money, sir, for promotion of art? Nobody will give unless you collect the money.
And it is small money.
10,000, 5,000 for the friends.
Yeah. You are absolutely right. Many were cancelled. Fortunately, 13.8 came into place, saying don't do that. In another way, without saying tax that year if you want. But that does not mean you have to simply cancel the 12-year registration. Because there is one leaf is gone dry, don't uproot the tree. And in other countries, since I have exposure in so many other countries, there is something called UBIT, unrelated business income tax. UBIT. They say, if your business is nothing to do with your activity, charitable, they will tax that separately. Quite fine. But here, you go next door here, just on the GN Chetty Road. There are established historical institutions for the disability people, etc. And the disability people, it's a therapy for them to do certain activities which they will sell and which they will get some income. We must actually admire these people. In spite of their disability, they are engaged in certain activity, like a therapeutic it is, and then they get some income, and it's a dignity for them. Have you heard about the foot and mouth artists who are sending the greeting cards free? They will not expect you to send you, first you send money, then I will send the card. They will say, we are people of dignity. If you would like to support us, please buy this card. When I get it, I am in tears. Because, people in these days when nobody wants to test anybody, these people, foot and mouth people, they simply trust us and send a card, one packet.
The greeting card.
Yeah. And when you see that, and when you see the wording, we don't want contribution, donation, nothing. We just want, if you can pay the cost of these cards, that will be good enough to support us, like that. Now, if those activities are considered as a commercial, and if because of those commercial activities, if the tollway is cancelled, you can imagine what that can be. Cancellation, I think this already mentioned to you. Violation of any other activity. Yeah, yes, Vishwa.
Opportunity applied for interested person, mentioned only.
Yeah.
Suppose one trust giving to another trust on a lease basis for 1 rupee. Whether he can say that it's a violation of 1320 because they are not given free, but they charge nominal rent or 1 rupee. But it is less than the fair market value, like you can say under like 56.
See, this is a real situation with many trusts today. There is a parent body and there are other bodies. Now the parent body owns the land and the building and because they are purchased some 100 years back, 50 years back, 30 years back. And today the other bodies need right for the property. To take a live example, if the sister body is running a school, the land which is in the name of the parent body has to be given and leased to this body. In the case of CBSE 15 years, in the case of state it is 30 years. Now, the arrangement is the parent body will make a lease deed in favor of the other body. The other body will pay a nominal rent. Now, in my opinion, objectives of both the bodies are aligning, matching. So even without a lease rent, it should be possible because the parent body is supporting the cost of the other body, sister body, and the objectives are same. So to promote my objective, I can form any other method. I can do myself or I can contribute to somebody else, cash or in kind or anything. Now if you charge a nominal rent, that is good. If you charge commercial rent, no question. Even then there cannot be any question because this body is also for a charitable purpose. That body is paying commercial and it is carrying on its own charitable. If the parent body did not have a land, they had to take a lease from somebody else and they had to pay the market rent, isn't it? There are many schools today paying market rent. Many schools, they are paying market rent and using the various places. Okay. Now, audit. We have already spoken about it. Audit report for 1110B, audit report for 1023CB, and a new form is introduced. It's a long form. They want auditors to certify almost everything from the name onwards. The name, the bank account, the donation, the trustees, everything. I just request you to go through it, and I hope it will not be required to file it for this filing before September. But if we have to file for this September and if that comes somewhere in September, it's over. It's going to be very difficult. So I just request you to go through it.
Here there is no limitation of turnover or activity.
No. No. That is there. Exceeding the basic exemption. But these days, the trust basic exemption and the trust, where is the connection? Most trusts are all above the basic exemption. We have small trusts which is started maybe 1 month back, or small trust giving, having a corpus deposit and making some scholarship, small trusts are there. They have to file, they cannot wait for September. They should file by end of this year, this month. This actually July, because it's extended end of this month. Yeah. We do have quite a few small ones.
So what is basic?
Yeah, please.
What's the basic exemption?
No, that is for the compulsory audit. For the compulsory audit, whatever is the basic exemption for the particular year, if it is below, there is no need for audit. That is the case even with the Societies Act. Under the Societies Act also, there are threshold. No need. Small income, only members of the society can audit. You don't need a chartered accountant. Whereas what I am saying is, most of the trusts are above the basic exemption that we are seeing today. There will be here and there some old trust with a small corpus fund with little interest paying some scholarship. There may be below the basic exemption. They don't need compulsory audit. But in that case, they have to file before this due date. They cannot wait for the audit due date, audit cases.
Sir, in case of object of general public benefit, we have this cap of 20%
Yes.
for trading.
Yeah.
So, in case in particular year I have violated and I am having more income, say some 22%.
Yes.
So, the income tax department has the power to cancel the registration.
Yeah. Good
Or
question.
we will lose the charitable status only for that particular year and next year we will be eligible.
Second is the right. Previously, before the introduction of 13 subsection 8, their department was doing all kind of things. They used to tax the year, they used to cancel that 12 year saying that you have gone into commercial activity, which means you are not in accordance with your objective, etc. That is settled. Now it's only the second. That year they can tax. That does not mean next year we are not eligible for exemption. We are very much eligible for exemption in the next year.
The next year you have to apply again?
No need. Because 12 year they are not touching, no?
No.
12 year they are not touching. In fact, in amending to 13.8, they even made a circular. You don't have to necessarily cancel the 12A circular, a long circular also the department gave, CVDT. So they don't now cancel 12A at all. This cancellation of 12A for this music, like our colleague said, and for the Chamber of Commerce, was that interim period. After the amendment of the proviso to 215 and 13.8. That interregnum period they cancelled quite a few. Even in Chennai, Madurai, Tiruchi and other parts of the country. And that is still going on. It is not settled. But fortunately, now the trend is, judicial trend is, Chamber of Commerce are also exempt. Starting from Delhi High Court, the trend is now Chamber of Commerce, they may have some business activities, but that does not mean they are completely coming under the trade commerce. They are promoting trade commerce. They themselves are not trade commerce entities. So there is a favorable trend that is going on in the country. Now, corpus donation includable limit for compulsory. This is a simple thing. Suppose your total income is below the basic limit, but corpus donation is 10 lakhs. If it is added, it goes far above the basic exemption. Now, it's very simple because 224(2)A says voluntary donation in the nature of corpus are also is income. Therefore, for the purpose of income, corpus donation is also considered as income. Time limit for filing the report can be filed any time before the completion of the assessment, even at the time of appeal, is now old story. The new story is when you file the return, ITR 7, those of you who have filed already for this year and those of you who filed for last 3-4 years, unless you file Form 10B, you cannot file ITR 7. ITR 7, there is a question which you have to answer, date of audit report, filing the audit report. So unless you fill that, you can't be filing the ITR 7. Therefore, in practical reality today, both have to be filed together. But another story, I don't know whether you faced it last 1 year and 6 months or 9 months. Last year, the CPC came up with a view you are not filing ITR 7 and Form 10B together as required under the rules. Did you come across this? And the demand was in the nature of 1 crore, 10 crore, 25 crore. In Bombay, one of my colleagues came in touch with me. Sir, just for the simple reason, I've got a 75 crore demand. These were all paper demands. I understood from the department it is somewhere in the nature of 7,500 to 10,000 crores. Just for this reason. Tell me, when we were filing the manual return, it was possible. First put ITR 7, then after that put Form 10B, and then put one chapa, finish it. Now in the portal, Form 10B you have to file, you have to go to the assessee has to agree that we are the AR, after that you have to again accept, file it and accept, and then after that ITR 7. Of course, we ourselves accept on behalf of the assessee, that is a different matter. That is between us. Okay? But however, that process has to be complete, isn't it? Technically. So, in simple reality today, we have to file both first 10B, after that ITR 7. Luckily, after lot of representation, not only, I think South was very little representation to my knowledge, always the Mumbai and then the Surat and that area, aggressive. They made big representation, what kind of demands is happening, and then now the department is revising themselves. Sumoto. They have revised, at least to my knowledge, 50% of those demands they have already themselves revised. I hope this year that won't happen. This year also we have to follow the same procedure. First we have to file Form 10B and after that ITR 7. And if Form 9A and 10 is required, that has to be filed before ITR 7. Because if you are filing 9A, which I am coming, and if you are filing Form 10, you have to definitely say no, that what is the date of filing 9A and then 10 in the ITR 7. Only then ITR 7 you can do XML, only then you can upload that into the portal. I am now trying to go to computation. Computation is for application. We spoke of application, accumulation and assessment. So I am going to computation. In 1 minute I show you 3 models of computation. First model, of course, before going, gross income minus automatic accumulation 15% minus application of income, balance. If the balance is 0, no tax. If the balance is high, depending upon how high, we go for 1 year accumulation or for 5 year accumulation. Now let's look at simple computation for a discussion purpose. This is a model 1, scenario 1, 100 lakhs gross receipt, deduction under 11(1)A 15% automatic, and balance income 85%, income applied revenue 70, capital 15 and 85. Friends, we can take each line and we can discuss for 1 hour. For example, what is gross receipt? We can go on and on. We can write 1 chapter only on gross receipt. Is it net income or is it only the receipt? Now what is receipt? What is income? And in cases like, for example, in the case of a school, is the fees is the gross income, or is fees after the expenditure for staff is the gross income? And in contract distinction, if you take, for example, income from property, many in NPOs own huge rental properties, and rent is, let us say, 10 crore, and to earn the rent, the property tax, the maintenance, and all of that is 2 crore. So here 10 minus 2, 8 crore is the gross receipt, or is it 10 crore is the gross receipt? We can go on and on and on. And we can also go on to say, is the computation under 245, does it apply, for example, income from salary, income from property, income from business, profession, capital gains, other sources, does that apply to this computation? Or this is only a simply total amount available for application? We can go on and on. The last one is most important. From historical times, through circular in the 1960s and 70s, and through judicial trends Like Madras was the, the pioneer in that. Kalavala Kannan Charities, you must be hearing even today they run, old schools in the city here. The case went to the Supreme Court, High Court and Supreme Court, etc. The clear settlement is today commercial income available, money available for application towards charitable or religious purpose is gross receipt. In other words, in a school, the gross fees collected is the gross receipt. In the case of property, it is not the rent minus to earn the rent, the basic expenditure, property tax, watch and ward, maintenance, repairs, not 30%, like in the income from property. It is actual expenditure. The balance is the income, gross receipt, or available for application for charitable or religious purpose. Are you with me? The difference between the two. Expenditure of property tax is not application for charity. Expenditure of property tax is to earn the income, to keep the property in order, and then the net rent will be the gross income. But that's not the case absolutely with a school fee or a college fee. School fee or college fee is the total is the gross. And salary for faculty is objective expenditure. They are teachers, they are faculties, they are doctors in the case of medical institutions. Therefore, they are not the expenditure to earn the income, they are expenditure towards the objectives. Today I must tell you the ITR 7 is coming out nicely, making a distinction between establishment expenses and object expenses. This is a feedback that we have been giving last nearly 13, 14 onwards. We have been giving this feedback. For heaven's sake, please separate the expenditure incurred to earn the income and the expenditure towards objectives. The set of boxes that I was showing, the 215 boxes. Fortunately, this year, not last year, up until last year, this year, the ITR 7 will show clearly establishment expenses and object expenses. When you go there. No, last year you have to segregate. I just gave a session to the exemption officials of Kerala and Tamil Nadu, giving the analysis of the last 10 years of ITR 2. I was telling from a nursery rhyme to a PhD thesis paper today.
Schedule AI was introduced from last year.
Yeah, AI was there, but that's only aggregated income. I am referring to the application. Application is separated this year nicely. It could still be better, but definitely much better than the previous years now.
Sir, what happens in the case of a society? Just they got two streams of income. One is membership fees, which is collects from its members.
Okay.
Then second, it also conducts events and conferences.
Okay.
And on that also comes surplus as well.
Okay.
In such a case, if I apply what you are saying, my gross receipts will be only the membership fees which I collect from my members. The other part is not gross receipts. Or rather, the other part is I can take gross receipts, I can net off my expenses also, is it right?
Yeah, you are bringing a very specialized area. Like in the health, today if you go, specialization after specialization, you don't have any more general practitioners, no? Now he is already bringing an interesting dimension, membership fees. When you say membership fees, are you a mutuality person or are you a charitable person? You know what I am saying? Are you a mutuality concern or are you a Tolye concern? No, this is not to criticize or this is not to pick hole or find fault. This is to say, if you have mutuality activities with the membership fees alone, that has nothing to do with section 11 or section 1023C. You can even keep that separately, and then you can focus on the other activities which will be under 215, definition of 215, whatever you can fit it in there, those set of boxes. But the problem is, when the membership activity is part of a charitable entity, the department comes up with a suspicion of 13(1)(c). What is 13(1)(c)? Interested persons. You are all members and you are getting benefit. How can I give you 11 exemption? Are you with me? So, in a case like this, of course, we have to go into the reality, you know. I mean, I was naive myself 20 years back, I would not have known the difference between the two. நம்ம என்ன சொல்றோம், அடிபட்டு கத்துக்கிறோம் இல்லையா, டெய்லி அடி வாங்குறோம் இல்லையா, ஒரு நாள் ரெண்டு நாளா. So now I would say in a situation like this, you must see how you can separate the mutuality part and the charitable part, you know. But again I will tell you, if the mutuality part is 5% and the other part is 95%, even department will ignore the mutuality part, you know, and department will still give you 11 exemption. But if the mutuality part is increasing to 30%, 40%, 50%, though it is our money which is part of the institution, department will say you are getting benefit. I'm not worried about the source of income. I am worried about the application. 13(1)(c). So this is what I would like to say. You can take a call. I always make a distinction. You know, we have in reality so many associations. Music association to caste association to linguistic, to name any number of associations. The associations are part membership bodies. We belong to that body. I want to be a member of that body. I want to contribute my membership and I have a right to vote. And I'm sure you know how some voting organizations are so visible, like Nadiga Sangam, for example. Okay, so they want to exercise the right for vote. Now they definitely cannot come under the 12A category. It's not advisable either. But what I would recommend in those cases, go for a separate 12A trust. Same people from the elected body becoming the governing people of this body. That's what I recommend. This body has nothing to do with mutuality. This body gets a donation, corpus donation, this has got all the various activities. That's how they are structured. Does it make sense? This is the reality. Now I go to, with gross receipts we have spent, see how many minutes, please help me to move on. If I take another line, for example, revenue expenditure, what is revenue expenditure, then what is capital expenditure, then we can go on and on. I am skipping and I am going to 85% utilized, total income nil. This is a very happy position? Not anymore. Because the department will come up with 40A3, that's exceeding 10,000 cash expenditure. Department will come for the non-TDS expenditure. Then what happens to this? God in the sky.
More interestingly, this time there is a 100% disallowance for cash expenditure.
Yes.
So take an example, 1 crore is received. I have applied 88 lakhs towards my object. So I have crossed 89%. There is an 8 lakhs cash expenditure I have done. So naturally I have to disallow 8 lakhs. Then it comes less than 85%. So am I taxed for the full amount?
I know. I know this will come up.
Absolutely an anomaly. I don't know. They should at least penalize only for the 8 lakhs. Because of this 8 lakhs, the income is reduced less than 85%. For the entire surplus, I have to pay tax.
No, I knew this will come up and I compliment you for bringing it quite early. This could be also the opposite. Just see whether you are with me. Here is a case where it has gone above 85% that minimum application and the cash expenditure is 8 lakhs. So it will be, when you disallow it, it will become below 85%. Now take another case where the disallowance is, let us say, 40%. Okay? Then what happens? 60% only is really applied. I mean properly applied. Then what happens? Are you taxable for that 85 minus 60 only 25%? Or are you taxable for the 15 plus 25, the whole 40%? Okay, another way. See, this question I have discussed in other forums, our own forums. Another way, people ask, why not I exercise 11 once, 1 year accumulation? I am short of 85%, I have 25%, 85 minus 60, 25%, let me apply for 9A, 1 year. and some other, why not I apply for 5 years? All these questions are there. Now what is the answer? When we go to medical science, sometimes when they cannot diagnose the disease, no, they give all types of antibiotics.
One by one.
And when you suspect, what is it? Antibiotic after antibiotic, antibiotic after antibiotic. I'm trusting, I'm trying, I'm trying. You know, you have heard that from the medical experts, isn't it?
Right.
And today diseases are like that. No more all diseases are known. You know, we are in that situation.
In fact, in one case it is penalizing too much. Ulta, if you take 1 crore, I have expended 90 lakhs, there is a resultant of 5 lakhs.
Yes.
I am not affected.
Yes, yes. Now in this case, again, 95 I have utilized, 5 is a bad expenditure, meaning it is a violated, no TDS done. Still I have spent 85%. Now, will I be completely exempted or will I be taxable on the 5 lakhs? 5 lakhs, that is the violated expenditure. For all this, there are 2 views are possible or more views are possible. One view is a benevolent view, another view is a whatever you call it, harsh, aggressive, whatever. But let me tell you, what will be the view of the department? In favor of the revenue. In favor of the revenue. So what they will say? Violated expenditure. The reason we want this cash expenditure disallowance, non-TDS expenditure disallowance is because of violation, they must be taxed. They must be taxed, irrespective of whatever is your percentage of application. Number one. Now I am acting as a devil's advocate. Second one, what they will say, if I say, I will accumulate this 25%, that is 85 minus 60%, 25%, they will ask you, fine, go ahead, where is your money? You should have surplus to accumulate. You should also invest in fixed deposit. Now in the form 10, you have to fill even the fixed deposit detail. What will I fill? Will I fill the past fixed deposit? If I fill past fixed deposit, they will say this is not from the income earned from this year, this is from your past accumulation, this will be from your corpus fund, this will be from your previous 15% accumulation. How can I accept that as the part of the, So, in other words, if you ask me, again, as I said now, by trial and error method, error on the safer side. Error on the safer side. But the problem is this kind of entities don't allow us even to do that. Because it's only last minute, not in the when they come to OP or IP or OT, we are able to help. When they come to sometimes only to the ICU or ventilator, we are trying.
The issue is because it was applicable to business entities. They have just introduced saying that it will be applicable as if it is for the business. The computation method is different here.
I tell you, if you see the reality, as you all know, these charitable entities are functioning with limited capacity in rural areas, almost with zero facility. No, they are doing all this.
Like a GST compliance.
Yeah, right. So it is a harsh provision. Hope that courts will come in favor or good sense will prevail for the future, and then there can be some better amendments for the future. But right now, if you want to really help these bodies, what we should do is to really take a view, safer side, err on the safer side. Then only we can help these bodies. Moving further, I will go to the next one. I don't want to repeat the first few lines. The last line, if you see, last line says 10 lakhs is the balance income. Another scenario. 10% of the gross receipts, 10 lakhs. That's another scenario. Here, easily this organization, this entity can take a view that I will spend in 1 year. Because it's only 10% of the gross income. It is not 90% of the gross income or 80% of the gross income. Whereas, if you go to this scenario, look at this. 35% of the gross receipts is the surplus. Here, it is a high risk for this organization to go for 9A, 1 year, because more than 1/3 of its income is not spent. Now, what about next year? If they accumulate for next year, and next year also there is 1/3, what happens? And I have come across cases where next year the total expenditure itself is not up to 35 lakhs. Next year. You know what I am saying? Then what happens? Balance will be taxable. There is no other option left out at that point of time. So we have to exercise lot of prudence when what has to be done. But again the problem is we come to know this in the last minute. You see, the accounts are not ready. Why accounts? Even the bank statement is not given. The vouchers are not given. Sometimes it is last few days, last few hours, things happen. So the answer is we have to do this well in advance. The only way if we want to help these bodies. Now, Form 9 capital A and Form 10 are digital filing, as you know. And in the digital filing, there are certain issues. Let me give just one issue, and I don't want to waste your time with other issues. When you do a computation of 100 lakhs that you saw here, you see that 100 minus 15, 85, 50 only utilized 40 and 10, therefore 35 is a balance. Can you be with me in another scenario? For example, 100 application by way of capital and revenue is 110. How much? 110. Then what happens? Are you still eligible for 15% 11(1)A automatic accumulation? There's nothing. Nothing. In Excel sheet, if you make with a formula, it will still show 100 minus 15, 85 balance, and then 110 total expenditure. So 25 is the loss, excess over expenditure, excess expenditure over income. But in reality, you don't have any surplus at all. Are you with me? Now, when you go to the Form 10B, and there is a place you have to fill up, 15% of the gross income. What will you fill there? Zero. People very often, no sir, that is automatic. No sir, on the 100 I have to put 15 there. There is nothing. That's one part. The other part here is, thanks to the Honorable High Courts and finally the Honorable Supreme Court, the law is settled now from early this year, 2019, that excess expenditure over income of a body, non-profit body, can be carried forward and set up in the succeeding years.
They were not accepting in Chennai for many times.
Matri Seva Trust, they did not. Rajasthan High Court, no. Rajasthan High Court was the pioneer court, pioneer order. Now the Supros Education Society, SUBROS. Supros, it is not reported in some of these things, but you can go and see. It's a beautiful decision which says 95% of the courts approved or favored the carry forwards. Only one or two courts, particularly Madras High Court, was not in favor. Tribunal also was not in favor in two cases. All that's over. Old story now. The real new story is Supros, SUBROS Education Society is the Supreme Court decision which says that you can carry forward and set off the excess expenditure. But one thing is not answered. One thing is not answered even there. Is it
Gross minus expenses?
Yes. Even the department, the other day that alone took 5 minutes in my discussion with the officials, exemption officials. None of the decisions, either High Court or the Supros, is talking about what is that excess. In this example, is it 10 lakhs, that is 110, 100 and above that 10. Is that 10 is the excess expenditure eligible for carry forward and set off, or is it 15 automatic plus 10, 25 is that? What do you think? Courts have not answered. What's your answer? There is no, how can you say excess 25 here? You had 100 income, you spent 100 and 10 more. It can only be another 10 which is excess of expenditure over income. But you know how the discussions can go on. Endless discussions. Fortunately, even the Supreme Court has not answered directly this issue. But I suppose we have to exercise as professionals, we have to exercise prudence on this matter. I hope this is okay. Now we go further. Yes, Vishwa.
capital expenditure, whether we can incur from the corpus fund, that is the income applied, for example, revenue expenses from the current year income I am applying.
Yeah,
Capital
yeah.
expense, suppose if I got a huge corpus
Yeah,
fund,
yeah.
I'm incurring some expenditure for building, whether that can be treated as application and
In my last couple of years of my relationship with Vishwa, he is known for bringing up this kind of issues. Interesting. See here, beautiful point. Corpus and then capital. Corpus income under 224(2)(a, but got exempted under section 11(1)(d). Now, from that, if I make capital expenditure, I can't be eligible to treat that as a capital expenditure. Application from the non-exempt income. Corpus is exempt. Is from that I am making the capital expenditure. That portion of the capital expenditure shall not be eligible as an application from the other income, because that is exempted income. That is exempted income. For that matter, even the capital expenditure incurred from the old balance, accumulated old balance, if the department can prove that, for example, department has proved in certain cases, the capital expenditure happened in the month of April, May, June, and my corpus came only in February next year. Department could prove, saying that no, you incurred the building cost of 5 crores from the opening balance, not from this corpus. This corpus is in bank balance or deposit. I can't then take it. Is that good enough? So, not possible. If we take it, we will get disallowed. We will get it disallowed. We got one more point? What is it?
I got income only 50,000, whereas I got interest from fixed deposit 2.42 crores.
Okay.
Or 2.42 lakhs. Whether
Okay.
I can treat that as a business income and I can take the application 85%.
Interest income, like any other income, is income for the non-profit organization. No question.
But my income from donation only is being
Doesn't matter.
higher amount because this accumulation has.
Doesn't matter. As I said earlier, for income gross receipt for the purpose of application in the case of a charitable or religious body is the commercial income available. Bank interest and donation, everything. Only difference is corpus. Because it gets exempt under section 11(1)(d). Of course, another is capital gains. Capital gains, as you know, has a complete different treatment in the under section 11. 11(1) capital A deals with the exemption of the capital gains. You may have a capital gain of 100 crore. Today some bodies have 100 crore because they got a land in OMR and the OMR when they bought it was 10 lakhs. Today it is 100 crores. 100 crores. And what is the net consideration? 100 crore minus 10 lakhs? No. Because department says that 10 lakhs when you bought, you have already got it exempted as capital expenditure. Why can't I again give you as capital again as a cost on that? Are you getting the point?
Yes.
Net consideration is defined here itself. Net consideration for the purpose of section 11(1) capital A is total sale minus expense incurred in connection with the sale. Full stop, no comma, no semicolon. Only in the case of section 45 onwards, that the capital gains computation, that the cost of 10 lakhs and the indexation, etc., fair market value from 1984 to now 2000, etc., are applicable. Here they all have nothing to do, no relevance in the case of section 11.
Sir,
Yes.
sir, in this case, say for example, 100 lakhs is the receipts and has been to the extent of say 90 lakhs. So in the case in form 10B, what is the amount you will certify, sir? It is only 10 lakhs or you will take it as 15% and certify 15 lakhs?
See, today, when you go to Form 10B, the portal, or when you go to ITR 7, what happens? Whatever you put, automatically, gross income, then application, no? The difference automatically will be taken for the not exceeding 15%. Are you with me? Not exceeding 15%. So in your case, only 10%. 10%. Because that's how the surplus available. That can be eligible for 11(1)(a. You know? It's very, very interesting when you see each line how it works, the sections for the non-profit is the smallest number of sections in the Income Tax Act, but the issues that are arising are the largest that's possible, because of the type. Now we move further to the mandatory TDS. We have already discussed about it already. I don't want to take your time. And 11.1 explanation 3 for determining the amount of application. That's also we have discussed already. That is the cash exceeding 10,000 and the non-TDS. We have already discussed it. And then look at this for 1 minute. And just for clarity, what we have discussed is here, amount spent by NPO on the left side, eligible TDS not done. So 30% of the expenditure not allowed. And the 30% of the expenditure not allowed. Still 85% application done, here 85% not done. This is what you were asking exactly earlier. Okay? On the right side, eligible TDS done, all expenses allowed. Now here 85% not done. Can I go for 9A? Can I go for 10? No, risky. Because the department will simply hit it and say, you don't have money to do it. You have already spent it. Just that it is a violated expenditure. And the same thing, you can take an example. In both the scenario, the disallowed amount will be taxed. Income of 1 lakh and expenditure of 90 lakh. Eligible TDS not done is 15,000. 30% of the not allowed on 15,000 is 4,500. And if you see here, 90 minus 15 is 75. On the violated 15, it is 10,500. After deducting 4,500, total application is above 85%. 85,500. On the other side, simply without going to every line, the total application is below 85%, 78,000. The point is, in both the scenarios, the disallowed amount will be taxable. It's not my view, this will be the revenue view. Revenue view, isn't it?
Is it not too much for
Absolutely. And we are seeing live organizations who are finding it extremely difficult. For example, ambulances, when they carry these dead bodies, they won't accept check and draft, only cash. When I'm coming at my daily live cases, when a person gets sick and a non-profit organization wants to admit in a hospital, they want immediate payment, 30,000, 50,000, nothing nowadays, no? And if they try to give like a check and a draft and all of that, the heart will say, okay, wait, I will wait until tomorrow when your check is. Live cases. So it is a harsh, really harsh provision. But unfortunately, unlike Chamber of Commerce and FICCI and Association and all of that, who is taking these issues? We are feeling these issues when we have to do our obligation. Otherwise, these issues are not really, unfortunately, highlighted. Capital gains, I already touched upon, but just to say one thing, capital gain, when it happens, you don't have to utilize it. Of course, there was a dispute 30 years back. Capital gain, can it be utilized for the objectives? There is no question on that. Very much you can utilize for the objectives. If that is not possible, then you can acquire another asset. That could be for objective or anything, another asset. And another asset can be ordinary fixed deposit. What more is ordinary fixed deposit? But of course, courts have said minimum 6 months they must be. This is like the US visa cases, no? They will put 50 lakhs and they will take it. We will get the balance certificate, bank balance certificate. By the time bank balance certificate, no bank, no balance there. Nowadays, I came across a case, show cause notice has come to somebody, without putting any money, the bank manager issued a certificate, debit and credit. Debit and credit. CBI has taken over. Why did you debit and credit? So likewise here, I am not going to any manipulation. I am saying, if a capital gain net consideration is put in a fixed deposit, that is good enough. And of course they are saying for 6 months. That is possible because if a non-profit is selling a property for let's say 20 crores, they are not going to spend in 20 days. They will be taking time to plan what they want to do. Maybe in 1 year or 6 months they may acquire another land or building, or they may construct, etc. So it is simple. Only thing, they must be not in bank balance. If they are in bank balance, they will not be eligible. Of course, you have another option, accumulation. Accumulation. So I always recommend both you do, accumulation and fixed deposit. Fixed deposit is also required for accumulation, 5 years. You may ask me why. Sometimes no, the department is aggressive, fixed deposit not in order, debit, put it. Then you have to pay 20% now as per the CBDT norm before filing your appeal. So to avoid, put an accumulation also, and 5 years very much you will see they are going to spend it for certain objectives. Anonymous donation, as you are aware, 115 BBC. For a religious trust, it's not applicable. It's applicable for a charitable trust, and they are taxed at 30% MMR. Accumulation for 1 year e-filing, 9A. Accumulation that is under the explanation to section 11.1, and 11.2 is for 5 years. Earlier it was 10 years. Sometime back it was 10 years, now it is 5 years, and you have to have a resolution of the governing body as the board of trustees. You should have the fixed deposit made this year. This year. You cannot take a old year fixed deposit. Now you have to mention the fixed deposit in the form 10. Am I right? The digital. So you cannot take a previous year fixed deposit and say this is out of the income of this year. Previously, when it was not necessary to mention, anything was possible. Now it is not possible. It is also not possible. The other day there was a discussion again with the exemption officials. When you have made a deposit, it's okay. But when you utilized for the purpose, you have not matured the deposit. You have used other monies to realize that objective, to spend the accumulated surplus. The deposit you made from the surplus is still available. Are you with me? What will happen? Again, benevolent view. Benevolent view. They put up they specified a purpose. They have achieved that purpose, conducted the activity, no other violation. Instead of maturing that deposit, they have used the money available till they have fulfilled the purpose. Benevolent view. Another view can be, no, money set apart which is made in fixed deposit is unutilized. Okay, fine.
So is it the deposit to be for 5 years for accumulation purpose and the
Not necessarily, not necessarily, not necessarily. Good question, good question. Gautam Singh is, my friend is asking, which I have not faced earlier. I have not really faced earlier. You are accumulating for 5 years and 11 too, but should you make the deposit for 5 years? Not necessary, not necessary. You can make the deposit for a minimum period, whatever you want, according to the interest rate, etc. You can renew it if the purpose is not yet achieved. The activity that you proposed is not yet achieved, renew the deposit, no problem. Of course, here, one thing I am bringing, not to confuse you, but to say how sometimes the department is taking another view. You made an accumulation under 9A last year. It's a live question that we are facing in a few cases. You made an accumulation under 9A last year. You should have used that within 1 year, that is this year. This year you are making a 5-year accumulation. So I am saying that 9A accumulated surplus you are not utilizing within this year. That is also part of your 5-year accumulation under Form 10. Are you with me?
Yes.
Now, the fact is that 9A money and more is spent during the year. The 9A money and the more is spent during this year. After that there is extra income, which I am very much eligible to accumulate for 1 year or 5 years. Isn't it? So these are kind of issues that we are facing nowadays. But of course, if you want that 9A you can go on and on and on every year. Nobody can say anything. Am I right or not? Go on, 9A. This year, if 9A is, for example, large income case is 5 crore, I apply for 9A. Next year also I apply for 9A, 9A, 9A. Be cautious. There are court decisions, including, for example, in Karnataka there is that famous university, Vishvesvaraya. Have you heard about it? Supreme Court has concluded you are a state university, but you are a commercial activity. Because year after year the surplus was 100 crore, 200 crore, 300 crore, year after year.
Now that is, some other case it is reversed.
No, that case is not it. But what I want to say, commercialization, profiteering in the education sector is becoming a botheration, both for income tax and also for education department, also for the courts. Commercialization and profiteering. Though I am giving this example because this is a government university. Vishvesvaraya is a government, like our Anna University. Exactly, Anna University, Tamil Nadu, Vishvesvaraya University, Karnataka. And what they have done, collected huge deposits, huge donations or contributions from hundreds of engineering colleges. And year after year. So we have to be little cautious, I am saying. Though 9A, what I said is practically possible, legally possible, we have to be cautious, we have to be careful. Okay, accumulation for 5 years. These are all old story. Previously 75% up to 2002-03, now it is 85%, previously 10 year, 5 year now, and intertrust transfer is not possible. Once you accumulate, intertrust transfer is not possible. Neither for 10 cases, 11 exemption, nor for 1023C exemption. Intertrust is not allowed. Like I gave the Kerala flood, during the year you can give it to any other entity in Kerala and ask them to implement the Kerala flood relief. But once you accumulate it, you only have to implement it. You cannot transfer to Kerala, another entity there, asking them to implement it. 9A to be filed within the time allowed for filing, and 10 also has to be filed within the time allowed. Here, I would like to say, time allowed, I'll come see from 1/4/2016, kindly note, Form 10 which had the facility of condonation by the Commissioner of Income Tax has lost that facility. No more the Commissioner can condone the delay in filing the form number 10. Previously 119 2B, Commissioner had the power to condone the delay provided there are 4 conditions. I don't want to go to details, genuineness, that now it has used the money properly, etc. Commissioner condoned hundreds of cases. Commissioner cannot condone anymore. But for assessment year 16-17, many people represented saying 16-17, we had lot of difficulty in uploading ITR 7, Form 10B, Form 10, etc. So there is a circular, it is December 2018, no? 2018. December 2018, there is a circular, clear circular, which says, for assessment year 16-17, you can go up to the Commissioner and ask for condonation, though your Form 10 is delayed, though your Form 9 capital A is delayed. Now our friends are asking, sir, what about 17-18? That circular does not cover 17-18. We have to wait for one more. If at all that comes right now, that will not cover. And on this side, 11.2, income not applied or deemed to an applied, following 2 conditions. Furnish a statement to the AO stating that the purpose and the period of accumulation maximum 5 years, accumulated income to be invested, the statement referred in clause A to be furnished on or before the due date, period of an order or injunction in any court to be excluded for 5 years. Suppose you were asked to, you have given a purpose of constructing a training center. I have a live case like this. Somebody went to the court saying training center cannot be conducted in this place. The court gave an injunction. Nowadays, no. Neighbors go to the court saying you should not construct here. So with the result, what happened? They could not spend it within 5 years. That's a genuine case. So that is excluded. You can even do in the 6th year or 7th year, depending how long is the injunction period. That can be excluded for the purpose of 5 years. Any amount paid or credited out of 12AA or 1023 4 to 6A institution not allowed. That is, the intertrust transfers are not anymore allowed. And now we go to the last assessment process. Just for 3 to 5 minutes, and after that feel free to, we can discuss other issues. Assessment process, unlike the past years, has become quite efficient, I must say. Now the assessment notices are coming in the portal, and the portal gives a number of questions, sometimes 12, sometimes 20, sometimes 32. They are, they have standard questionnaire. So we download it and then we make the reply, and then we scan it, and there are limitations in the uploading box below 5 MB. I know if you make 5 from one computer to another, it makes 5.2. So make it 4 plus so that it will be below 5, then upload it. The reply goes to the department. Sometimes the department is asking to bring the hard print of the reply. Not always. Now, as you know, no more it should be hard. Any communication should be DIN communication. You must be following that now. DIN communication. Nothing manual will be considered as official communication. Only online communication. So, after you upload these replies, assessment orders also are put in the portal. This is, I am talking about scrutiny cases. Now CPC of course goes on. CPC. Lately CPC has completed quite a few assessments smoothly without going through. You must be hearing already that Chennai cases will be done in Mizoram, near China. And Mizoram cases will be done in Mangalore. Mangalore cases will be done in Siliguri. This is the current paradigm that is coming up. Meaning to say that nobody should have face to face. It should be only sheet to sheet, portal to portal. This is the thing that is coming up. You must be following this. These are there in the media, but I can confirm to you my discussions with the relevant officials on this matter. That's going to be the future. In other words, if our documentation is in order and if our replies are to the point of the queries that are raised there in the portal, I think things are going to be much better for us than the past experience of going and waiting in the queue and not finding the officer, and then only to get an answer. None of these details are enough for me. Bring me one more set of details, completely different set of details. I think those days are going to be over very soon. Now my experience is a good preparation is a must for assessment. Questionnaire is also quite educative. You can see the questionnaire and the ITR 7 are aligning each other, going, same way. Like which box of the section 215 are you falling and what are your activities, so both are aligning each other. And if we understand and use it, answer it, my experience is it is a very useful and a very positive experience. In the assessment process, assessment is done through e-portal, questionnaire is sent in the e-portal, reply is in the e-portal with supporting documents, e-assessment is ordered also on the e-portal. Issues arising, just one or two I am mentioning. They may not be everything. If you feel free, and I will not impose these issues upon you. These are some issues commonly we are all facing. Number one, issues relating to application. You must have heard in different commissionerate of exemption, they are taking different views on the application. In the Karnataka commissionerate of exemption, for a school or a college, they don't take the gross fees as income. They take the net surplus as income. Then they ask you to spend 85%. Have you heard about it? Yes, in Karnataka. I am facing it. Number of appeals are filed. Up to the coordinated special bench of the ITAT has said, no, that's not correct, take the gross income. But it's going on, But luckily very few places, not in Chennai, that's not the case. Gross income, total income, so gross receipts are taken And of course, after that, things are far better. If in a school or a college or a hospital, the entire salary expenditure is a huge 80% sometimes in a school or a college. That is the objective expenditure. And after that, there will be other expenditure, academic expenditure. Finally, 5% surplus or 10% deficit, etc. Okay, that's one. I don't want to confuse you, but just to say how things are developing around the country. Issues relating to accumulation.
Even in CPC, Bangalore, the expenditure as application, they are not taking on
Yeah,
housing orders.
very true, very true, very true. This is in tune with their thinking for Commissionerate of Karnataka. Because they have taken that stand. I was present when they were taking that stand 7 years back. And unfortunately, that's an officer from Chennai who took the stand in Bangalore. You know. And so when I go from Chennai, they will say, it is your man who did it. I said, I don't know who is our man. So that is going on. Once they take a stand, then they have to go on now until finality. You know. So anyway, coming back to the issues on
The basic expenditure itself, they are not considering as an application.
then what else can they? It's true. I agree with you. I agree with you. You know what I did? In a number of cases like that, quickly I filed a Form 10. When they were recomputing and issuing a show cause notice, I said, anyway, I have the money. I have the money. So I filed a Form 10. Of course, at that time, condemnation was possible. Now that is also not possible. You see? Where am I? Then going to the accumulation, issues relating to accumulation, not to again take too much of your time. 9A accumulation, they are looking for, have you received the income or not? If you have not received, yes, 9A. You have received and not utilized, then what's the reason? Received towards the end of the year, the particular activity could not be conducted. I am conducting it next year. Okay, because the subclass there says that, you know, income not received or received towards the end and not utilized. Now in 10, there is an issue. The issue is the purpose for which you are accumulating is clear or unclear and vague. Unfortunately, some people have put surplus 5 crore, accumulated and set apart, I make a deposit, then purpose as per objectives of the organization. As per objectives of the organization. I don't see any harm in that, but unfortunately the department's view there is objectives of the organization is an unclear statement for purpose. Very vague, too wide. So specify what is it. As per objectives will be okay for 9A. 9A, because no purpose required. For us 10, purpose is very important. So therefore, courts have said you need to have a clear purpose. But the exaggeration, the other side is, some officers take a view, you must spend only for capital expenditure and not for revenue expenditure. Absolutely incorrect. Absolutely incorrect. It's not necessary. For example, I myself have cases where the donors have given the money specifically to be spent on sick people, differently abled people, for medical, education, etc. You know, and they have given it towards the end, February, March. I could not finish it during March ending, and I am accumulating and spending next 2 years. And donors don't give regularly. Some years they give, some years they don't give. So when I get a good money, I want to accumulate it for 5 years. Nothing wrong. Nothing wrong. So that you can be sure, but very vague, unclear, wide statements in form number 10 is risky. It's a little risky. Okay? That's about the accumulation. Issues relating to assessment, the sky is the limit. Issues relating to assessment, sky is the limit. They can bring up anything to disallow, to say that Tollier is not there, not in order, approval is not there, etc., etc. And issues relating to application, gross income, net income, I have talked about it. Loan, I have not spoken. Excess expenditure, I have spoken. What about loan and expenditure? Many educational institutions and medical institutions are taking 100 crore loan, 200 crore loan, very normal. Do you know now banks give more loan to the non-profits than to business? Yes, I am telling you. You know? They are quite sure about the repayment. Otherwise, they will attach the fees. Now, take a live case. 100 crore loan, they have put up another block in the college. Can they claim that another block capital expenditure as a capital expenditure for application? Why not?
The department is taking a view that you should spend only from the income,
Yeah.
not from the loan.
That's the point. This is not spent from the income. It's from the loan. Then what next? Repayment of loan is an application, fortunately. See, these are all we went through, what can I say, Caesarean operations. Last 10 years, 15 years, several cases. Now it is settled. Courts have settled, department also accepted that repayment can be considered as application, not the capital expenditure. See, express expenditure over income carried forward is a different concept. Earlier we spoke about that. That's a different concept. That's the normal course, normal income, normal expenditure, and we have spent extra. 110. You remember that example? 10 carry forward and Supreme Court. That is a different concept. Here it is a very simple, clear concept. Big loan, big capital expenditure. Big capital expenditure is not an application because the big loan is not an income. But repayment is out of the income. Again, that has to be income, not from another loan. If it's from another loan, it won't be considered as an application. Okay? And then I think I can go on and on, but given the time, I would like to request you, if you would like to discuss any special point, then we can discuss. And each of that, I have only covered only 3 A's: application, accumulation, and assessment. There are so many other aspects. We have not enough time. But feel free, if you have some specific questions, we can discuss that.
Any other, you said violation of any other law, you highlight more.
Yes, of course. Let us take specific cases. I have so many examples. So far, I used to tell the department kindly not to worry about your violation. There are other departments to worry about those violations. Now I cannot say that after this amendment. Take the case of FCRA violation. See, there are organizations who have received foreign contribution without proper FCRA registration. And take cases, for example, people are bringing, last couple of weeks, people are bringing to me issues, building violation, country planning, town and country planning, and the one in my, one of the cases, the organization is ready to pay up until 10 crores to regularize a large building in order to get it approved and go for the UGC approval of the college. But the department, the development authority saying no concept for regularization. You can pay any money, you pay the money, but no regularization. So there we are facing. Now we cannot get a AICT approval. You know who is AICT? That is for engineering college and the business schools, etc. AICT is the approving authority. They will not approve the institution and the course unless the building is approved. We are already facing a problem there. Now the other problem, based on that we will also face income tax problem.
Interesting case that AICT gave approval for 400 students. They have taken 450. It is a violation against department.
Of course. I think violation by non-profit is plenty. Some 10 years back, or little before 12 years back, I had an opportunity by the ICAI to study a regulatory framework for NPOs in India. And a study group with my convenership, we made a study of the regulatory framework for non-profits in India. We thought, it's a small work, what is there, some 1 week, 1 month we can finish it. What is there, income tax, FCRA, maybe something else. When we listed, it came to some 19 laws. First thing we had to ask the ICAI, please extend the time by 5 times. 3 months originally they gave. There was no way. So when we made the study, it was such a, it's so many, up to the violation of Stamp Act. Stamp Act. So many things are there. So this is a very harsh provision that we are facing, violation of any other act. You get some idea? Yeah.
Because ESA and PF, obviously.
Many non-profits, they know they are liable under PF, but they are not gone to PF. And some of the non-profits, to my knowledge, is having 25 crores PF demand. And the trustees are questioned for prosecution. Trustees. And ESI, many have not gone. ESI is very much applicable to several of these NPOs, but they have not gone. These are all common violations.
Specific question. The current year idea, as you pointed out, establishment expenses, then.
Object.
So my question is, I am running an education institution.
Right.
Teacher salary, etc. to majority, 90% of my expenses are towards school running and maybe 10% is my establishment. So in filling this, expenditure of objects are the test, there's a simple line education. Can I fill the entire amount there or my salary has to come down?
Question. This can be beautiful question. This can be amplified to group of institutions which we are facing.
What is this question?
In an education institution, you have teachers' salary and non-teaching salary, school support staff, that the peon and the watchman, security, etc. salary, all that is there in the school expenditure. Now the idea new form says admin expenditure or establishment expenditure and object expenditure. In the object expenditure there is one line education expenditure. So his question is, can I put 100% of the school IND or RNP payment side into the education expense, or should I segregate? Is the question.
It's a biggest
So
confusion.
what is pertaining to administration you have to say?
Sir, there is no administration in the school.
No, how will you run the administration?
No,
There will be
administration-
staff.
No, there is a specific column here, rent, advertisement, staff. My question is staff salary consists of 80%. Can I put it single in here because it is not my establishment?
Okay, let me give you, see, whether I like it or not, this kind of questions amplified, multiplied, I face every day. We have friends here sitting before us here who are facing that, multiple institutions, a school, a college, a business school, and something else, all together run by a single trust or a single society. These are all facts of life today. Let me share my perspective on it. If I look at a group of institutions, live, I am not giving the names, it's not necessary, a group of institutions, there is a college, there is a business school, there is a B.Ed college, and there is a engineering, arts and science, etc. And there is one corporate office. Corporate office. In my view, the corporate office you can take it for establishment. Everything else should be for pure education. Pure education. After all, it doesn't matter to the section 11(1)(a) whether it is establishment or it is an object, because it's expenditure.
No, because this person will view differently.
I know.
That is the reason.
I know. I agree. They will now like to say what is like the same question. You are asking like a devil's advocate. Because the revenue will ask the same question. How can you do without establishment? How can you say 100% is your activity, objective? So, what I would say, live reality if you assess. I am in front of me several live realities. In a group of institutions where there is a corporate office. Today you will find corporate office for many of these institutions. You will see even the city, as you go on this road, you will find a corporate office. Next to me there is for a university, deemed university. You go to T Nagar, you will see corporate office. You go to Mount Road, you will see corporate office for university. So when you can identify such office which is coordinating the activities of the various institutions, you can safely say this is my establishment. Everything else is completely education. That is my perspective. Right? But it's not so simple. It's not so simple in every case. Because in some cases there is no corporate office. Each body has some expenditure going on.
The very purpose of introducing that class is, my humble opinion, you to spend more on administration than on object. That the government wants to do.
Good point, good point. Here I would like to make a comment. I welcome this comment. However, there are institutions which are regulated by other so many laws. Take a college for example, it is regulated by the university, it is regulated by UGC, it is regulated by AICTE, and salary is fixed by the pay commission, and fee is fixed by fee fixation committee. You know what I am saying? So you are tight, very very tight you are in your both income structure and expenditure structure. But I totally agree with you for a NPO which is getting grant. That grant, under FCRA, do you know they allow up to 50% of the amount as administrative expenditure? I think it's a spelling mistake. 50% is not administrative, it is maladministrative expenditure. 50%. But that is allowed under the FCRA. I totally agree with you. That's why I am saying case to case we have to see how it is structured. Okay? Yeah. Yeah, please. Yeah, please.
In the ITR, last 3 years, they have removed the column for a fixed place where we insert a 12-year registration detail. Previously, 12-year registration, we like a PAN number we insert. Now, details of projects or institution run by you. I am a trust where my donations are 10 lakhs. There is no institution, there is no project. I sometimes give to help with education or sometimes give medical. It is so confusing. I have to put the same name, then charitable, then 215 lakh all segment. One 12-year registration, I have to put 5 lakhs.
I agree. I can only say when you analyze the 12 ITR 7 from 2008 to 2019, lot of improvements. Hope this can become little better. This year also, in the same case, I have just this morning I have a serious problem. One large institution, 121 approvals were there, live case. Last year they consolidated everything and got one approval. That one approval is on July, first week, this July. Now when I fill that approval and put the date, July 2019, it doesn't accept. It doesn't accept because this approval, I am putting this for the previous year because it got consolidated. You know how the universities take time to give these approvals. They don't give it overnight or 1 week or 1 month. They take a lot of time. I have a situation. Now if I don't put that, then my courses will go unapproved. Now if I put unapproved, income tax I have faced the music, GST I will face another serious music. GST wants ITR, no? And GST will say these courses are unapproved. I already have 20% of the courses unapproved. I don't want approval. We are paying GST on that. Now when I get 80% of the courses under the unapproved category, I am going to face the music in GST also. So these are anomalies. These are.
In the statement of computation,
Yeah.
final computation.
Yeah.
I think you must have noticed.
Yeah.
3 versions of ITR released by government. Corpus fund is exempted under 11(1). So they should put rightly the non-corpus fund plus aggregate of income minus expenses. So the numbering is given. I don't know how to be.
Instead of adding voluntary contribution and other income, they are saying add corpus donation and other income.
Now what happens? Private softwares, they have ulta, they have full. That is then only it is tallying. Otherwise, even in ITR, there is a major mistake.
I know what you are saying. This is where ignorance is really bliss. Ada padicha headache. Padikkaga utility upload panna, thanks be to God. No, I appreciate what you are saying.
The assessing officer is not taking into account all these things. The assessing officer is simply process.
நீங்க வேற அசசிங் ஆபீசர் ஐடிஆர் 7 பார்க்கறது இல்ல. ஐடிஆர் 7 பார்க்கறது இல்ல. சார் அதுக்கு எங்களுக்கு சம்பந்தமே கிடையாது. Then what do? I go for IND, I go for RNP, I go for balance sheet, I take the gross there. Then why should we file ITR 7?
The CPC people say they simply pass.
The corpus and non-corpus is now ulta in the.
I know it's ulta. But when you go to Java utility,
that is.
It's taken care.
In point number 7, 1 plus 2 plus 3.
Yeah.
There it is taking 2 plus 3.
Yeah. This is the point. There are 4-5 anomalies like this. Right now the department is grappling with it. because they only study the instruction.
Yes.
No, I tell them, we don't study the instruction. Simple. Then what do? We follow one of the software, Computax or whatever. Otherwise, we go for Excel utility because Java utility was not ready up until 6th of August.
Yes.
And that was also defective. Bug. 14th August only the Java utility came with a better debugging. For example, TDS was not accepting in the 4th August Java utility. 14th August Java utility. Now the TDS also from 26 says it is accepting. This is the reality we are facing. All this is okay. I am only praying new Form 10B won't come in before 30th of September. So if at all it is possible for you, please file the ITR return even if you have to revise later on. You know, because new Form 10B comes, then we are going to.
Only a draft.
Yeah, it's only a draft. But who knows, they will make it mandatory on the 20th of September.
Really.
Last year they did, no? For other forms. If you remember audit report. You see? Sorry, someone is standing for a long time. I'm sorry. Okay, one more. I'll come to you, please.
See, we were talking about this carry forward last.
Yes.
So typically we know 100, I have spent 110. But now department is taking a view, you have received only 100 income. You cannot spend 110. The source must be from either your past accumulation of 15%. And that is why I think there is a column introduced in the current year, give the source for expenses.
Yeah.
So is
Yeah.
it practically, can there be any carry forward or not?
I think Supreme Court is the highest court of law in this country. And if the department is not following, it is a problem. But I tell you, the current form, there is no provision to carry forward.
That's why.
The current form, if you go and fill up extra expenditure, it will make it zero.
Yeah,
It will not carry forward. This is the reality.
So
This
what to
is-
do, sir?
yeah. One thing we can do, I am saying it by the last 20 years of experience. First time I started this approach of giving feedback to the department, not just as an individual, through our own ICAI, through other forums, from 2000 onwards. Not that we have 100% success, but we have success. If you see this form's improvement over the years, if we give 10 requests, at least 5 they are considered. One by one. This much I can confirm to you. So what I will say, since we are people committed to this process in this area, because these institutions are touching the lives of thousands and thousands of vulnerable people, section of the society, we can forcefully give the recommendation. I have the experience. Even for example, FCRA, the ICAI made a request to me, give a write-up. The bank, which was only one bank was allowed in the past, in the 2010 Act, they allowed multiple banks. You know, we represented. I had the personal, opportunity of writing that representation for our institute. And not only because of ours, the NPOs also represented saying we cannot manage with one bank, so it is now allowed. So slowly the improvements are happening. That's all the consolation that I can share with you. Can I go to another person, please? Sorry, sir.
In continuation of that idea 7,
Okay.
there are trusts which are religious
Charitable. Yes, of course.
There are public religious trusts.
Of course.
Where do we, in the given expenditure application call, where do we do the religious?
There is separate item religious. There is separate item religious. There is separate item for each of the 215 boxes. Yeah, I didn't go to that. Maybe I'll take 30 seconds. While charity is defined under the income tax section 215 of the Act, religion is not defined. Okay? But religion is defined by the courts of law. That it is a faith in a supreme body, etc., etc. So religion is not under 215, but it is a separate objective. And of course, without deviating your question, for a long time department had a problem that you cannot be both religious and charitable body. Either you must be a religious body or charitable body. Are you remembering? They never used to give even a 12 year. They said PCT, PRT, public religious trust or public charitable trust. No question of religious come charitable. That is now possible since last year. In department now they give religious and charitable, 100%. I myself have got it. Last year we represented to the commissioner. The current commissioner said, no, that we agree. They agree because Dawoodi's Bora's case in Mumbai, Maharashtra went to Supreme Court and Supreme Court said nowhere the Act says you cannot be both religion and charity.
In fact, they were insisting to put not more than 5%.
Yeah, that is for ATG purpose. That is for ATG purpose. No, when you have a religion and charity, you can still have ATG. Just because there is a religious clause, you should not be denied ATG, provided your expenditure on religious is less than 50% for that purpose. But right now, the whole country, the process is that you can be both religious and charitable. Therefore, your question is absolutely valid. You can be both. You can be a purely charitable trust. You can be a purely religious trust. You can be also religious from charitable trust. All these are only after 1961. Prior to 1/4/1960, you could have been anything. Partly charitable, partly not charitable. Partly religious, partly not religious. All these are after 1/4/1961. So in your case now, if you have religious activity, there is a column for religious. If you have charitable activity, then you follow one of those items that you saw there. Is that okay?
One of the principal activities is maintaining a social.
Okay, okay. Of course.
The trustee of the society and where do we include that in this section? Because it is only talking about relief of poor and whatever education, legal and stuff. But the Kolle has been given on based on the trustee or it's been approved by the but I don't know where to enter those.
What about GPU? Advancement of any other object
Yeah,
or
but if the entire amount, the amount crosses 20%, then it will be no.
what is the nature of income you have? Then it's okay because it's not a commercial activity. Donation cannot be a commercial activity and your expenditure can be on the advancement of any other activity of general public utility.
So it does not matter whether the expenditure is on
No problem.
only the GPU face the issue only when it is in the income.
Absolutely. Trade, commerce or business. If the income is in the nature of trade, business or commerce.
So if it does not fall into any of the 5 limbs, then it has to go under GPU.
Yeah. Absolutely.
One other sorry.
Yeah.
You were talking about level 1 capital A for the capital gains.
Capital gains, yes.
This is capital gains due to mutual funds also. This fixed deposit is applicable only on renewable profit.
You mean in the place of fixed deposit, whether you can go for mutual funds?
Redemption of mutual funds or short term or long term. Those capital gains are also applicable at the level of capital gain. The fixed deposit clauses you had mentioned. I can invest in fixed deposit for 6 months. So we treated it as a capital asset.
Now, in the 11(1)(a), unlike the 45 plus, there is no distinction between short-term capital, long-term capital, nothing. So, whatever be the capital gain, the net consideration will be the amount that matters. If the net consideration is invested in another asset, including in FD, then you are exempt.
So even mutual funds are covered.
Absolutely. But not for making the FD. It is for the capital gains you are asking. For the capital gains, no? So far the courts of law have not said that capital gains can be invested in mutual funds. No. You know?
The other way.
I understand. Now I am just saying for the benefit of all of us, you know, the investment of another asset cannot be in mutual fund because that's not covered by the court decisions, FD. But capital gains can be from any asset. I don't think there is any bar whatsoever. Okay? Thank you. Yes, Vishwa.
Whether I can file voluntarily form 10, suppose my 100 rupees the income, expenditure 90, I am anticipating some disallowances. So, because the law is very clear, the commissioner cannot condone the delay. So, I voluntarily, after passing the resolution, I want to file the return because the Act doesn't prohibit me to, the Act doesn't say that I cannot file the form 10. So, I want to, as a safer side, I want to file, anticipating some disallowance will be there, I want to be on a higher side.
Yeah, people take caution, people take precaution. He wants to take abundant precaution. Isn't it? Yeah, very interesting. Yeah, I think so. But the problem will be when it is disallowed, what is the nature of disallowance? If it is in the nature of cash expenditure or non-tedious, but then the department will take a view. You don't have surplus to accumulate. You don't have surplus to accumulate. How are you? What are you going to accumulate?
Other expenditure, like revenue expenditure, because like a statue or something, I'm incurring huge expenditure. I'm anticipating the department will say that it is not.
I get your point. I get your point. Good thinking. But the problem is you have spent on a statue. Okay? Money is spent already. There is no surplus available to be invested. So in the case of Form 10, problem will be first we have to invest. Then we have to disclose that investment in the Form 10 in the digital, now in the portal. We won't have that, no? We would have spent it on that item, whatever be that item. So that is where I see the difficulty.
Inter-unit transfer is not permitted.
Yeah.
Suppose apart from inter-unit, suppose can I make a donation to another trust which is itself got a similar object?
Actually, Vishwa, inter-trust is not possible. Inter-unit is possible. When you say inter-unit, what is inter-unit? One school, another school. One college, another college. Inter-unit. They are owned and managed and run by the same body. No problem. Of course, there are other problems like in the school, if you take a lot of money outside, fee fixation committee will question. You are taking the money from the parents, teachers, salary money, you are taking it to something else. But otherwise there is no problem. Inter-trust is not possible. Inter-trust is not possible only when the accumulation has happened, not otherwise. Otherwise, inter-trust is possible provided objects are similar. 12A is there. 12A purposes also similar. Here charity, there religion, not possible. Here charity, there charity, possible. And in the case of FCRA money, both should have FCRA, if it is FCRA money. And both should have the purpose of FCRA, that's not completely different there, no? Economic, religious, educational, that also should be similar. I am going little further, but we face problems otherwise. The department now, all the agencies are coordinating, like GST and IT are coming together, FCRA and IT are able to take the information within no time. They are all available in the portal. You can take the information of any FCRA body from the FCRA portal. So, if that is possible,
Sir, one question is when we accumulate the income and carry it forward, we have to declare the purpose for which you are accumulating.
5-year accumulation.
5-year accumulation.
Yes, you are right.
So once I declare it, can I go back and amend that purpose? And if so,
Excellent question. Excellent question.
Can I do it even after the
Excellent question. 11(3) capital A. Go back and see. Allows you to change the purpose provided it's a genuine circumstance. I have come across so many of them. In fact, I gave one example of a training center. In the case of a training center, they bought the land, but it is near Vedantankal, where it is a sanctuary area, so they can't get permission. They did not know that. Now they have put the big money for that purpose. Now they can't do it within the time. They have to identify another big land. Now it's not easy. Then they have to do the approval from the town country planning, etc. Not possible within the time. So then you can amend the purpose.
Can it be done even after the assessment for
No. It has to be within that 5-year period.
Within the 5-year period?
Yeah.
But after the assessment for the...
Of course. Because you have accumulated and set apart and carry forward. No?
Right.
So still you have freedom, right to utilize. No problem. Can we, Yes, please.
This is with regard to corpus donations. After the recent amendments, corpus donation is not treated as an application.
Yeah, excuse me. This is about corpus donation, recent amendment. Okay, I understand.
Yeah, from one trust to another.
Yes.
Corpus donation is not treated as an application.
Yes.
Though it is not treated as an application, it can still be given. That is the question. That is a parent trust. It wants to contribute corpus donation from its earlier accumulation to a new trust as corpus donation, because they are not going to spend it. They are going to keep it in fixed deposit and use it for a different object. Both have layers and both have similar objects. But though it is not treated as an application, can the parent trust give the corpus donation out of the previous accumulations to the new trust?
Very, very practical question and a beautiful answer also you have given. Okay. The recent amendment about corpus fund only prohibits a giver, not the receiver. The giver cannot consider that as an application. Receiver can very much take it as a corpus, no problem. Now in your example, giver is giving from the earlier funds, not from the current year. Therefore, the earlier funds anyway will not be considered for application. So it has no relevance. Absolutely no problem. Absolutely no problem. Okay? Anything else? Yes, sir. Yes.
Application income or the benefit of the trustee. Whereas the managing trustee and the capacity of project director, he receives monthly salary. Say small trust, say monthly 20,000 rupees. So in a year 2 lakh 40,000 rupees. Whether it is he is a professional qualified advocate also, he is managing the trust. So whether it will be allowed in the income tax. I specifically shown in my audit report. Related persons or specified persons have got benefit like that. I have put it also.
Absolutely no problem. 13(1)(c) does not impose a total bar on payment of salary or remuneration to the trustees. It only says reasonable. Now, what is reasonable is a very unreasonable question. Each one will define reasonable. Somebody will say 1 lakh is reasonable, somebody will say 1 lakh is unreasonable. So, but what is our stand as professionals? We can go for solid framework. If it is a salary to a doctor who is giving a service as a managing trustee, we can see the salary of doctors in the government hospital, private hospital, market, etc. You know, and if it is almost the same amount, we don't have to worry about it. We can support it and we can definitely have a favorable decision. But remember one thing, if you are paying from, you are a society and you are a managing, you are a member of the governing body, then Societies Act is prohibiting that payment. In Tamil Nadu alone, this is a unique, unfortunate provision. This is not in Karnataka society nor any other society to my knowledge in the country. The Tamil Nadu Societies Act prohibits total bar on payment of any remuneration to the members of the governing body.
What about the Trust Tax Act?
Trust Act, no prohibition. Income Tax Act, no prohibition. Income tax is reasonable. And you cannot expect all the founders and managing trustees to be doing without anything. There are so many NGOs who are they are the authors, they are the trustees, and they are doing a beautiful job. They can't be remunerated, really well, and they are given a reasonable, in fact, very, very simple remuneration. And if that is questioned as unreasonable, that will be very, very unreasonable. So, one more, yes, sir.
20 years back, a trust was created for running a school.
Okay.
The trust deed was registered with the sub-register.
Okay.
No other registration.
Okay.
School was running for
no
past
problem.
20 years. Meanwhile, the person the trust has obtained PAN number as a trust.
Okay.
Now they have deposited more amount during demonetization period. No IT return is filed so far. Now the department has sent a notice for inquiry regarding the demonetization deposit. Now when I replied that there is no totally registration, the ITO says, how can I assess it? Shall I transfer the file to business circle? Or since there is no totally...
Okay. Go ahead.
I don't know how to assess it.
You want to assess it or you want to get exemption?
No, that was the reply given by the ITO.
Right. See here. There are hundreds and hundreds of schools and colleges, even today they don't have 12A. Is it a good idea that they don't have 12A? It's not a good idea. Not a good idea. But does not mean that because they don't have 12A, they should be not exempt. Because the legal framework is very clear under the income tax, which says, I have a friend sitting there, a madam, who have almost, she can write a thesis on this topic, correct, ma'am? Illa? Eludhalam, PhD thesis, eludhalam. Each one, some of them, I know, each question we can take up and write one book. she and I can write one book on this very question. She was eligible for 1023 AD, illama? AD, below 1 crore, correct? Clear? Department was not giving. You know why? No, it is only for one school or one college. When the trust has got more than one, then you are not eligible. Whereas this year says each institution, that's all. It doesn't talk about one PAN. For department, one PAN. One PAN, 1 crore. But court cases are there to say, no, that is not the case. You can be eligible, etc. So, I have a case in Vijayawada. For the last nearly from 73 onwards up to today, they don't have 12A. And they are a very, very reputed school. Very, very reputed school. Recently, they are attacked by the department. That you know.
Less than 1 crore, sir.
Huh?
Less than 1 crore.
They have been having so far less than 1 crore. But the department has added something and said you are more than 1 crore. Department, see, we are in the brink, that 95, 96, they add something. Border level diabetics இல்லையா ஸோ சில சமயத்தில் 5 வருஷம் diabetics border level 10 வருஷம் border level எப்போ கிராஸ் பண்ணுன்னு தெரியாது. So that is all risky cases. So in this case, I think if you are coming under any of this, for example, you can very well avail this exemption. If you are below 1 crore, for example, then you can very well, nothing is required, as you know. No approval required. Above 1 crore, then you have to go to CIT. I told you in the beginning itself.
But while filing the return, he has to claim 1023.
Of course. Now the form allows. So you can file the return under 1023. You are educational, no? 1023 AD and claim the exemption. That's all. Friends, do you think already?
Yeah. Even without 12A registration, we can get
1023 has no need 12A at all. 12A is only for 11 exemption. As a matter of fact, you can switch over, swap. When you want 12A, 11 exemption, if you have 12A, you go to 11 exemption. No, I don't want 12 exemption. I want to go for 1023C. If you are eligible, you can swap. It's not my word. This is a big case discussed in Maharashtra Bar Council. In Maharashtra Bar Council, they said, no, you can't do that. If you are under 11, go under 11. If you are 1023, you have to take that route. Supreme Court said, no, the assessee is free. Both are free to the assessee. And in fact, there was another view that the department took. You are an education institution, you cannot go to 11. You only must go to 1023 AD. That also is not anymore the law. Free, you have 2 options. Both options you are eligible. Only thing, conditions of each option you have to fulfill. If you want to go under 11, you should have 12A. If you want to go under 1023C, then fulfill this. Either you are substantially financed by the government or you are below 1 crore. But above 1 crore, then you have to go for approval to the CIT. Let's give you some light in the tunnel. Huh? Sometimes it is not a bright light, only a light in the tunnel. Then you go further on that. Should we close by now or any other questions? Yes, please.
whether audit report is required.
No.
So what is the duration in this case for IT?
No, now it is compulsory to file the return. You have to file the return. See, previously only that 4, 5 was, afterwards of course 6A only required filing the return. Now filing the return is mandatory even for substantially financed, even for below 1 crore. Previously there was no need to file the return for substantially financed and below 1 crore. Now all necessary. There is no 1023 which is exempted from 139(1). 139 4A and 4C. That's
If
all.
it is on audit, then it should be on below before the stock exchange.
Yeah, there is another confusion going on. Even though auditable cases, some cases auditable also, you should file in 31st July, 31st August. Auditable September, unauditable previous one.
Order cases, you make it sometimes depending upon the time to September.
Increasing. Make it.
10,000, 15,000.
I know. Put accrued interest. Many trusts have not taken accrued income at all. So if you take the accrued interest from the FD, it will increase. We know as professionals what we should do. These are not for manipulation. These are to make it more, practical and relevant. Can we say the last question? Since all of you must be already feeling it's a long time. Okay, please. I know you and your colleague will have very interesting question. Let me see what that is.
In case of a religious trust,
Yeah.
the main object of the religious trust is to provide annadanam to all people, and also to conduct some functions
Okay.
relating to God-related functions,
Okay.
like music and other activities.
Absolutely okay.
The amount they spend is somewhere around out of the 100%. Every year they spend somewhere around 88 to 90%. Of the amount they spend, around 60% they spend for another purpose. The remaining activity they spend for this conducting this music activities for getting to God and other things. Can I classify this as under 215 under relief for poor or under general public?
I think you are religious and charitable.
Yes, it is.
Religious and charitable. So you will be a religious and charitable. The Dawoodi Bora case that I was referring, the Supreme Court case, that will be 100% fitting for this case. So you claim whatever is a proportionate religious under the religious that column.
Our friend has said it is a religious trust. Once it's a religious trust, everything is religious.
Religious trust can do also charitable activity. This is the point. Religious trust can do also charitable activity. In fact, in the Dawood Bora's case, it's an Islamic sect which during the namaz and all that, they feed the poor. So the Supreme Court, the question before the Supreme Court was, is feeding the poor for a religious trust is within the objectives. Very much.
Also exact.
I know that. We have number of Kanchipuram poor feeding. I have so many old trust, 100 years old, third generation, fourth generation trust is happening. They feed Kanchipuram. They go and do poor feeding in Kanchipuram, and they are religious trust. Originally religious, but charitable cannot be doing religious activity. Religious trust can have also partly charitable activity. That's the point. Shall we close with this? So I want to say something that 1 month back they published the title. Only yesterday I had the invitation. Because that time I said I was sick with a very bad throat. I was unsure whether I can come and do it. But I would like to thank them. In spite of that, they made all the arrangements. And my throat was bad, but you were all with good thoughts. I think my throat is now completely all right. And I want to thank each and every one of you. The fact that you are remaining so long without any interruption shows your commitment and your passion. I am not saying this for words. By name, each one I can say how much you are involved in, how much passionately you are involved in the supporting the non-profit activities, and therefore I want to thank each and every one of you for your wonderful participation. I also want to very specially thank my dear brother there, Danny there. I would like you to please stand up. We both were supposed to be helping some non-profits today. And since I had this throat problem, and yesterday only when Giver said, you must come sir, I said yes. Then I requested, please let us put together the slides. We have so many slides. But triple A means we have to put triple A and not to become triple B. So in the last 2 hours only, he helped me, we put together this and we came to you. That's why I could not send you this Giver earlier, this whole thing. So I'm so sorry for that. Once again, I wish you a wonderful time of helping for compliance of the non-profits in the coming days and weeks. Thank you so much for this.